Silver price prediction. This week's outlook. Welcome back to our weekly silver price forecast. This week, silver enters the market with increased sensitivity to global events. The US dollar and bond yields, and several key technical indicators, are shaping the likely price direction over the next 5 trading days. The US dollar index remains the #1 driver to watch. If the DXY continues to soften and moves lower into the high 90 range, silver should benefit with upward momentum. But if the dollar rebounds on strong economic data or hawkish commentary, silver could face early resistance. The 10-year Treasury yield is also a major influence. Expect volatility as traders react to new data and Federal Reserve expectations. As a pullback in yields would support silver because falling real rates favor precious metals, while a spike in yields could apply short-term downward pressure. Looking at the technical picture, the relative strength index over the last 200 days shows silver gaining momentum, but not yet approaching overbought territory, indicating there may still be room for the current trend to continue higher before reaching exhaustion levels. Support and resistance levels are clearly defined. Short-term support is holding in the mid-$46 range, where buyers have consistently stepped in on dips, and major support sits near the $45 level, which has held firm as a strong floor. On the upside, resistance is forming near the $49 to $49.50 level. A strong breakout above $49.50 would be a bullish confirmation and could open the door for a move toward the low $50 range. We are also watching the Fibonacci retracement levels from the most recent move in silver, from $45 up to $49.50. The 38.2% Fibonacci retracement level sits around $47.80, and holding above this price level suggests the uptrend remains healthy. The 61.8% retracement level is near $46.70, often referred to as the golden level, and if silver pushes above that level after a pullback, it often signals the start of the next major leg higher. The silver-to-gold ratio also remains an important longer-term momentum indicator, as the current ratio shows silver still undervalued relative to gold. And historically, when the ratio becomes stretched, silver tends to play catch-up with accelerated moves, especially if gold remains strong or stable. Finally, world events remain the wild card this week, as any geopolitical conflict, banking instability, or sudden economic shock can push investors rapidly into safe haven assets such as silver and gold, which could quickly influence price direction. The base case scenario is that silver trades with a positive bias this week. We may see caution early in the week, but if the dollar weakens, yields ease, and technical levels hold, silver is likely to trend higher by week's end. In a bullish scenario, a weaker dollar combined with falling yields, a break above the $49.50 resistance level, and a move through the key Fibonacci zone could trigger a stronger rally into the low 50s. In a bearish scenario, which appears less likely, a sharp rebound in the dollar, rising yields, or failure to hold key support at $45 could lead to a temporary pullback before buyers return. Stay tuned for our end-of-week review, where we will assess how accurate this forecast was and what to expect next.